welcome to the Children's Media Conference 2021 session on corporations, credit, and cash flow. The very important triple C's of getting your production correctly financed and in a smooth and appropriate fashion, and an opportunity to answer some questions. We've actually had some questions inputted, and the panel will address it this afternoon, today. And on the panel today is Andrew Baker, who is a producer and executive producer, and once upon a time would confess to being a lawyer. And he is currently producing The Amazing Maurice for Sky Cinema. And also in a panel we have Val Castellet, who is an partner and accountant with Moore Kingston Smith, City of London accountancy and business advisors firm, and Lorraine Ruckstall from Barclays Bank. So I know many of you would like to know how to contact Lorraine. And Lorraine heads the media practice at Barclays. Chris Halliday from the BFI certification unit team. He's been with the BFI certification unit team for 10 years, and he assesses and provides guidance to producers on the cultural test and co-production treaties, which is required to access tax release for film and television. And Chris works very closely with key stakeholders in government and industry to provide support and guidance on the cultural test, co-production, and policy. So he will be here to advise us on the credits. And Chris, you can advise on other things as well, should you wish. So I'm going to open the first question to Chris, Lorraine, and Val on why does a producer who's trying to get new content fully funding and produced need to speak with you, and when should they first contact you when they're in the process of financing their production? Val, would you like to start?
Yes. Assuming that the producer is going to be claiming a film tax credit, they need to have a company and prepare a corporation tax return to be able to claim that tax credit. So they need to speak to us at a fairly early stage, not just at when they're still pitching, but when they've got interest in that film, when they've preparing a budget, so that when it comes to setting up a company, we can get them registered for VAT, get them registered for PAYE, and then ultimately claim the tax relief credit for them. I guess for us, it probably needs to be in between, I would think, speaking to Chris, having a look at whether their film qualifies, but before speaking to Lorraine, setting up a bank account, but certainly at a fairly early stage.
So Chris, is there any such thing as too soon to start talking to you?
I wouldn't have said so, no. I mean, maybe 2 years is too soon, but generally come to us before you go into production. We just want to make sure that you've got all the requirements in place, all set up okay, and then we can also guide you through the cultural test or co-production, whichever route you're going. Because as you said, Rosemary, we're the kind of gateway, we are the gateway to accessing the tax relief. So it is vital that you are structuring it correctly and qualifying for the cultural test, obviously. So I would advise come to us a few months before production, or if you're trying to plan further ahead, then feel free to come to us before that as well. Never too soon, I would say.
And I'm sure, Andrew, you concur that the BFI are very accessible in providing producers early advice and guidance.
Yeah, very much so. And it's really important to engage as early as possible on some of those fundamentals, because it really does affect how you structure the production and just making sure that actually you've not missed something. So a quick call is always worthwhile.
Okay. And Lorraine, how early should a producer be contacting you? And also I'll start working backwards here. And what do you expect them to show or tell you at that first meeting?
Yeah, so I would say probably when they've spoken to Val and to Chris, then it's probably a good time to talk to us in terms of they know what they're producing. Hopefully they've got a commission or close to getting a commission. They're thinking about what their budget is, and they're looking then at obviously how they can finance it and what those finance costs might be. So I would say that's a good time to come and talk to us.
And are you expecting to see a first draft of the budget, a rough finance plan?
Yeah, I think a first draft of the budget is really helpful, especially if they're at the stage where they want to know how much can we lend against tax credit, for instance. But we don't expect it to be in final form, but it is helpful to have that first draft so we can go, okay, this is what you're looking at, this is how much we can provide, this is what the cost of it will be, and then that can obviously go into the budget as you finalise the budget afterwards.
Okay. Now, one of the things that individual producers sometimes find is an issue when they're quite new to the game is, should they be contracting as an individual producer or should they be contracting as a company? What are the what are the preferences and what are the benefits and what are the drawbacks of contracting as a company versus contracting as an individual? And I think Val, I'll go around the house here, whoever wants to answer.
Well, to claim the film tax credit or TV tax credit, you have to be a company. And that company has to have responsibility for all the decision making of the film. So, as a general rule, if you've got a film with a certain size budget, you would want to set up a separate company to do that, particularly if you want to have the financial rewards of that and the be able to make the creative decisions. You have to set up a company to do it.
And what are the drawbacks of having a company set up?
Well, the drawbacks are there's much more administration than with having a company than there is being an individual. It's fairly easy to set up, but then you've got ongoing running costs. If it needs to be a certain size production, for you to want to set up a company, because the ongoing running costs of, producing a set of accounts, preparing those tax comps, doing the company filings every year, will add up. But also you will need, if you have a company and you want certain grants, then, companies making those grants will often only want to give them to a company. You will need then to register, the companies are safe for VAT, for PAYE, that all makes additional costs.
And Lorraine, am I correct in assuming that generally banks will only loan to a registered company?
Yeah, so whilst we might be able to do other sorts of financing to individuals, if we're funding against tax credits, then it would need to be a company, yeah.
And they've already answered for you, Chris, but it's usually...
Yeah, I can add to that, I think.
Yeah,
I just want to reiterate that the tax relief is there for all size of projects. You do need to set up a company before you go into production, before you start incurring any costs. But setting up a company is a fairly straightforward thing. But it's vital that you do set up that company. But it is very much a very open process. It's available for anyone within the industry, anyone making their first animation, children's TV programs. So it's not an exclusive thing. I would have said SPVs are generally set up by companies who have numerous projects going on at the same time. It just makes the tax relief claim a little bit cleaner and more straightforward to do. It's not a requirement. If you just have your company set up and you're new to the industry, you can very much just use that company to claim your tax relief.
And Andrew, do you want to explain what a SPV, special purpose vehicle, is and why you as a producer would choose to use it?
Yeah, sure. So I can tell you now, I have an SPV for every project I do. This is very much the normal way of doing things. So the whole point of a special purpose vehicle is kind of hidden, in the name. It's for a very special purpose. It's for saying, this company is going to do this particular project or this series or whatever else. And the point of it is that when you're making a production, you have lots of contracts you're entering into. There are rights that are being granted or assigned to different companies. So you will have writers giving you rights. You'll have to give rights out to a broadcaster or distributor. And so having one company that does just that project keeps everything really clean and really simple. So they're usually named in a very kind of obvious way that is based around your project title or something of that nature. It's kind of irrelevant what the name is really, but what you find is that everything from the contracting process to the tax credit claims to VAT, everything is just so much simpler if everything is in one place. And it cuts down on confusion, it cuts down on your costs with all the advisors having to untangle different shows, trying to work out which costs are allocated to which projects. And so generally, the SPV is a really good thing. It's a really positive thing for you to do. And although there are, obviously, as Val said, costs in setting up and maintaining it, actually they're not particularly large, that it's not particularly difficult, and so it's something that is absolutely expected on every project, that you have a company behind it. And if you start from a position of saying, well, we only have one film or one series, then it's kind of irrelevant. But as soon as you start to have 2 or 3 or 4, then an SPV becomes absolutely essential.
Now, do you find an SPV can be of assistance too if you're partnering with someone else to co-produce?
Yeah, absolutely. I mean, the part of co-producing is sharing rights, and the other party knowing that all the rights are in that company. So for when you're doing chain of title and you're showing that you actually do own things, then that's really important. Chris?
In terms of companies, if you're looking to access other public funding, such as the YAC Fund or any funds available regionally, you do, again, have to have a company set up. That's another requirement.
I would also say from a banking perspective, operating out of an SPV for each production is much cleaner and much easier to finance as well, because, again, everything that it relates to it is in that one production, and therefore it's just much cleaner. So I definitely echo what Andrew said.
We've talked about some of the practical benefits and the kind of the financing and that you have to have a company to access certain finance. But the other thing generally is just that any company that ever makes a film or a series anyone who makes it has a company. And so if you're going into a broadcaster or you're talking to writers or you're talking to co-producers and you don't have a company, then they will immediately question your kind of track record and your ability to actually make this work. And so there is an image really that like a professional presentation issue, which is if you have a limited company, then people immediately assume that you are competent and you know what you're doing, and that actually you are a producer, you are a production company that can do things. Even if you're just a writer or you're an artist, having a company and saying, it's Andrew Baker Limited or whatever it is, Andrew Baker Productions, it just gives you that sense that actually you're serious about this, and that actually you're preempting the fact that you will need one and you will need to work with one. And so that even apart from all the practical benefits, there is a real image issue, which is if you're not a limited company, people will treat you as either a creative talent, and that's a very different relationship and different deal structure, or they will think that you don't know what you're doing and that therefore they might hesitate. And they'll want extra assurance that actually you do know what you're doing and you do own the rights and whatever else. So it's actually really, really important to have that company for lots of reasons.
Yeah, I think it makes you just appear bigger than you are, doesn't it?
Yeah.
Very much so.
And is it a good way, Val, of keeping your individual private self separate from the accountancy and tax affairs of your production, your working life?
Yeah. And as I say, I think when I was saying before about having a certain budget of production, I suppose what I'm thinking of is sometimes we have clients who come to us and their very first film might be a really, really low production. It's actually, if the film tax credit, if the costs of running a company outweigh the amount of the film tax credit, we'd say to them, well, don't bother setting the company up, don't bother having the film tax credit. You know, and I'm talking sort of micro budgets when I'm saying that. You know, so if you're making a film, you know, your first short or something, and it was for, you know, 10 grand or something, then, you know, it's, you know, it may not be worth doing that. You know, but obviously if you've got, you know, a higher budget film, you know, yes, we'd always tell somebody to set one up.
Chris, are you at liberty to say how small the projects you've seen going across your...
Yeah, I've seen smaller than 10,000.
Yeah.
So yeah, as Val says, it's just a matter of just making sure that the tax relief you get back is more than the cost incurred to make the claim and pay for the accountancy.
Yeah. I think when I've seen claims sort of at that sort of level, they've generally not been through an SPV. You know, they're not ones that are getting external finance. They're, you know, self-funded, you know, and they will just be, you know, used in a, you know, they'll be made either in somebody else's company or, you know, in their own existing personal service company.
Yeah, very much so. Yeah.
Lorraine, will there be issues for the bank when you're loaning against the tax credit with the SPV if the rest of the financing doesn't seem as secure? Would the bank be in a position, or a bank or a funder be in a position that they might ask for a parent guarantee or any other form of security? And a parent guarantee may not really exist if it's the SPV is the first company.
Yeah, so actually, interestingly, if it's an SPV and the parent company maybe isn't as strong or maybe has lots of debt, actually having it in an SPV is better because we can very much ring fence the production. We don't need to get a parental guarantee. What we're looking at is the SPV. We're looking at that single production and does that stand up on its own? Is it fully funded? And therefore, can we put either a production loan or a tax credit against it? So I think that's why another reason why some businesses run it separately is actually the parent company might be where all the ideas come and where a lot of the costs are, and then the productions are all individual, and then we can look at them like that. And from our perspective, if we're doing a production loan, we don't take against an SPV, we wouldn't take a parental guarantee. I think the only time we would consider it is if we're doing some sort of more standard loan and it's against the risk of the parent.
In general, what are production funders looking for in order to approve funding?
Yeah, so from our perspective, what we're looking for is to we want to understand the business, we want to understand the track record of the people involved, and we often find that you've effectively got what are very new production companies, but actually the people running them have been involved in other businesses before and then set up by themselves. So the fact that it's their first production in itself isn't a problem, but I think it's worth kind of understanding what the background is. We want to understand what the project is, but we are kind of we don't really mind what it is as long as it doesn't kind of impact any rep issues, reputational issues, and then we're looking at who the commissioner is, what the cash flow looks like, what the term is, where it's been shot, so is there any risk attached with the production schedule, and really just understanding who the parties are that are involved in that production.
And across the panel, can you fess up to what are some of the rookie errors or repeated mistakes you've seen happen?
So one thing that I've seen happen is that producers sometimes don't calculate the tax credit correctly in their finance plan, and so obviously you won't ever have a really true picture of the tax credit until you've given a budget to your accountant and they've really categorised your spend and made sure all of that works. But you can do a very rough rule of thumb and work out what you're spending in the UK and what is going to be a qualifying spend for the tax credit, and for argument's sake you would usually discount a little bit anyway, but certainly miscalculating your tax credit in your finance plan is something I've seen that has some quite serious implications, because you think you're financed and then you suddenly realise you're not. So that's definitely one to watch for.
I think in terms of certification, it's the obvious thing, not setting up your company before you go into production. We have numerous applications that come in and the company's been set up 2-3 weeks into animation shooting or into principal photography. So it's essential that you're setting up your company before you start incurring any costs. It's an HMRC requirement for accessing the tax relief. So yeah, it's a basic mistake to make and an easy one not to kind of happen, really.
And I guess from point of view of professional services, not moving early enough, not talking to your tax credit accountant early enough to get the opinion going, and after they've started the application, not talking to the bank early enough, not delivering the documents accurately and fast enough, not talking to someone like myself just to get the documentation. It's always going to take a bit longer, right, Lorraine, than you thought it was going to be. We always do these perfect world time calculations.
Yeah. And it's always nailing down the budget. So we can go and we can get a credit approval for a certain amount, but then there's always those tweaks. So it's always getting that final budget that takes longer than anyone anticipates. So yeah, that's definitely something we see a lot.
And also the thing I've seen a lot is everyone assumes that the paperwork will be quick. It's taken years to develop. It's taken years to pitch. And then they go, we can start production next month and we'll deliver it by Christmas. But there is so much paperwork and so many things you have to go through that actually you have to allow that time in your schedule. You can't anticipate that you will start on day one. And the broadcasters will often be saying, we really want you to start production so you can deliver on time. Or you might be saying, if we don't start production, the costs will change and my budget will alter. We'll go over Christmas and that's extra time off or whatever. So it is always really important to have a realistic sense of the timings involved.
Yeah. Again, for certifications, just one other thing. We often see applicants paying the accountant to do the cultural test assessment. It's not a requirement to do that. It's a really... I would say easy, yeah. It's an easy process, and you can very much do it by yourself as a producer, and we would recommend people doing that to save on costs. Obviously the tax relief side of things, that's different, but the cultural test itself, definitely.
I would say exactly the same thing. We get so many people come in who say, I need an accountant because I need an accountant's report. And then I look at it and I'm like, you don't need an accountant's report at all. You're claiming points in section A and B. All we need to do is submit the tax computation for you. I guess one of the other things that I have seen though is people almost subcontracting everything out so that their company is not the decision-making company, and then thinking that they can, although they've even got it set out, there's been no decision-making, and they've effectively, made another company, the film production company, not their company.
I've also found that what might be done late in the game as well is the title report, and we could all be rushing near the end for that. And lately insurance, it's been taking a while to get approval on insurance. It could have, if they've designated anything an essential element in the production. So starting that, working with your insurers early helps as well.
A friend of mine had a project where part of the pack was some key cast, and even though it's animation, you're talking about some voiceovers. It's like one morning in a voiceover booth, anytime in the next 6 months. The insurers decided they wanted a medical report because they felt it was a big enough issue, that actually that cast was so important. And that delayed things by 4 weeks. Everyone else was ready, standing by. So there is always things that will crop up, and you have to just try and anticipate them as best you can, and try and get things organised as quickly as possible.
Okay, so at what point do you need the budget, the finance plan, and the cash flow locked? That's it.
I mean, at the latest point is completion, when everyone signs the paperwork. Obviously, the ideal situation is you lock it as quickly as you can, and then everyone has the same paperwork. The problem is always that sometimes isn't possible, that things change, that things evolve. You might be waiting for information, or even things like insurance. Suddenly you realise that the insurance premium has gone up, and you hadn't expected it to, and you then need to find a way to make that work. I think you need to be in a position as early as possible where you have a budget that is absolutely as close to final as you can. But the final unchangeable budget is obviously when you get to kind of completing the paperwork and things.
So Andrew, is cash flow king?
It certainly is. Obviously, one of the things about the tax credit is that you don't get the tax credit before you start production. You get the tax credit after you've already spent a certain amount of money and put a claim in. And so the question is always, well, how do I spend money that I haven't yet received? And that's where Lorraine comes in. And so your cash flow is absolutely the most important thing. If you don't have the money to pay people to make the series or the film or whatever it is, then obviously you're not going to make one. And so planning that and working out when you're going to pay people, and also dealing with the requirements of the different financiers in terms of what they will allow to be paid at certain points in time, is also essential. Rights payments, for example, it's really important those are paid on first day when you close, to make sure you actually have the right to make that series and that you've paid your option fees and all those kind of things. But equally, it might be that you are not allowed to take your production fee until the end, or some of your producer fees need to be staggered. You can't say, well, I'm going to take my year's worth of fees on day one. Those things are unfortunately not likely to happen, and I'm sure Lorraine can talk a bit more about that.
Yeah, so we're going into producer deferrals, Lorraine. What are they? And when can our lovely producers actually get paid for their hard work?
Yeah, absolutely. So obviously this is a point that we're pretty upfront when we're talking to producers about, which is if they're looking for finance for their production, and is that we expect their fees to be paid out last, ahead of everything else. The reason for that is that we want to make sure if there are any overruns that actually there's a bit of fat in the budget, because we'll lend 95% of the project. So we're lending much more than we would on a traditional loan, because it is quite structured and we're comfortable with that. But if there is any overruns, normally that comes out of the producer's fee, which is why that tends to get paid last. And if you are financing, we insist on it being the last thing that gets paid.
And what do you mean when the last thing that gets paid? What, like as in when the bank's paid back, or when the producer delivers?
Well, what happens normally is when the producer delivers, then the bank loan would be repaid. So it tends to be the same time. With some of the streamers, that's not always the case. And actually, once it's delivered, we'll take a view and say it's been delivered. Therefore, even though we've agreed to be repaid instalments, maybe up to a year after delivery, we'll still let the producer take their fee at that point, because they've done everything that's within their control.
Okay. And I'm going to step back a bit, go back to what Andrew referred to as rights payments on first day of production, that there will be, and just to make sure that everyone who's watching understands, when you go into optioning rights, the underlying rights with the original creator, that purchase price that's going to lock that you have the rights is often put off to being paid as of the first day of principal photography or storyboarding or animatics, depending if it's animation. And that could be a very substantial chunk, and that's going to be paid out of the production budget. So the cash flow, the bank cash flowing, you've got to make sure those first payments are there, ready to go.
Yeah, absolutely. And what we do is we sit down with the producer, we go through the budget with a fine-tooth comb, we understand what everything is, when it needs to be paid. Sometimes you might have certain payments coming in partway through, so we'll factor that into it as well. So yeah, we work really closely with the producers to understand and agree the cash flow, so payments can be made as and when they need to be. And sometimes they move around in the middle of production and we can accommodate that, but it's really important to have a really clear idea of what the budget looks like as we complete.
Great. So I've had emailed in a few questions before we did the record from producers. about this topic area. The first one is, Andrew, could you answer this? Will an SPV or will an option agreement on its own suffice?
So it really much depends on what you're doing. If you're talking about optioning an original idea or a book or some kind of rights to a project, then that's usually the beginning of the journey of developing something and pitching it. And so at that moment in time, you don't need an SPV because you haven't yet got to the stage where that's relevant. You haven't even pitched it at that stage. And you may never get to the stage. You might go 6 months in and decide that's the project isn't working and abandon it. So there's no need right at the beginning to have an SPV just because you're optioning a new IP. However, having a company to enter into those contracts generally is a good idea. And also, as you go through the process of developing, we've talked about, sometime after you've pitched, but before you start closing all the finance, you need to think about an SPV. And that is very much the case. And it's very easy to transfer the rights from one entity to another, assuming, of course, that you have made that provision in your option agreements, which is a very standard term.
And at what point do you need to ensure that the rights are actually held in the SPV or transferred over? The notorious one picture license or one series license.
It's important that the SPV has the rights to honour any contracts it's going to enter into. So if that SPV is going to enter into a deal with a distributor or a broadcaster, or even commission some scripts or some designs or something, then ideally the rights need to be in that vehicle to allow it to take place. Where it's wholly owned by another company, the parent company, the production company, who do have the rights, then it's a little bit more flexible in that actually the one picture license or rights transfer is part of the suite of documents that you put together to close everything. And so you would say to a broadcaster, well, Andrew Productions has the rights, but we're setting up XYZ production company as the SPV, and that will enter into the contract with you. But all the rights will be in that company before completion. So as long as it's done before completion, then it's fine. But it does just depend on what you're doing. And so if you're doing a co-production agreement and you're going to apply under a treaty or something for qualification, then you need to make sure you have the rights. If you're not really doing anything, then it's less of an issue. But certainly you just have to think sensibly and say, what is the SPV going to do? And if it's going to say, yes, you can have these rights, then it needs to have the rights. Sorry, my cat's just arrived. You need to have the rights within that company just to make sure that you can honour that agreement. And
Val, here's a classic question for you. Should you register straight away for VAT or hold off?
I would say register, as soon as you've got your SPV, as soon as you've got your bank account, register for VAT. The VAT application at the moment is probably taking maybe a week, but at certain times, if they're busy, that can take 3-4 weeks. I have known them even take even longer if they're really busy. But you want to get your VAT reclaims in as soon as possible and get your money back. But on the application form, it asks you for your bank account. So if you can do it in the order of set up your SPV, set up your bank account, and as soon as you've got that, register for VAT.
Which is you just brought up a very good question that wasn't asked earlier. You must have a production bank account because you need somewhere for that money to go. And that can take some time to set up, particularly in times of COVID. It seems to be taking a bit of time to set up. So start that process early as well.
Yeah, definitely, because the banks have to go through the Know Your Customer KYC process, and depending if it's a simple structure, that can be quite quick, but if it's a bit more complicated, then that can take a bit of time.
Is it faster or easier when you're using your production bank account as the same corporate bank as you are loaning from, you're borrowing from?
It shouldn't make a difference, but it means you're only having to go through one process. So I would say it's easier.
Yeah. Now, here's the long question. And the producer asked that he knows that financing packages are typically made up of many different sources of finance. But in what order do these different elements normally commit to a project? For example, the commission, pre-sale, distribution, second window, tax credits, something like the YECF production fund, gap financings, etc. Who's the first? We generally say production financing is a jigsaw. Who's often the center square or the first piece of that jigsaw to start the process?
Well, I mean, it tends to be that a lot of the other pieces are dependent on that first piece, which has to be your primary broadcast commission. If I could set up a production and claim the tax credit, but if nobody's going to broadcast it, then I won't have the rest of the finance. So usually you need a commission. That's your first piece of the jigsaw. And without having a commission, usually I would question even whether you would need an SPV, because at that point it's still development. You're still thinking about making something rather than someone saying, yes, we want you to make this. And then once you have that first piece, you have a commissioner on board. Usually that allows you to then go to distributors and say, hey, we have a commission. This is the project that I want to make. Would you like to sell it for me? And that can lead then to pre-sales and to other kinds of finance. And then at that point you work out, well, how are we going to make this? Are we going to make this all in the UK? Is it a co-production? Are there other countries involved who are interested? Maybe they will do some of the work. And at that point, you need to be speaking to someone like Chris to say, actually, is this something I can do? Am I allowed to work with this country in a way that works with the tax credits? And if so, is there a process I need to go through? Do I need to apply for anything? And so then you can work out, okay, does that structure work, and can I add the tax credits to my finance plan? And so I think everything comes from that first yes. If you can get a yes from a broadcaster, everything else will then flow from there. Equally, if you don't get a yes, then it's very, very hard to put the rest of the finance together, because everyone's waiting for that first piece of information, which is who's going to be your broadcaster.
And to wind up, can each of you please tell us what your best tip or piece of critical advice would be to producers?
Yeah, I mean, I've got a few written down on my list. I'll reel them off quickly. I said this before, but set up your company before you start incurring costs and go into production. Run all the finance through the one production company. You can work with other producers, you can subcontract work, but just run those costs through that one company. Come to us early, certification unit. We can talk through anything and just make sure you're passing the cultural test or qualifying as an official co-production. So yeah, come to us before production. And then lastly, never assume you cannot pass the cultural test. The cultural test is a very flexible test and caters for all content, caters for where the work is taking place, where the personnel are from, and there's areas within it you can very much pick up points. So never assume that you can't pass. Come to us and we'll guide you through it.
Yeah, I think my advice would be, again, talk to us early, and also make sure you understand what your cash flow is, because even if we can't help you or there's still some gaps in it, we can point you in the right direction and we can give you some advice. So, once you've got a commission, come and talk to us and we'll point you in the right direction and tell you how we can help, and when you need to then come back to us so that you're prepared.
Val?
Equally, I'd say talk to us early, and cash flow is really, really important. I would also say make sure you've factored in when you think you're going to get your VAT refunds, and that you're not just, you're going to be paying out your cost gross and then you've got to claim them back. So, don't do your budget net of VAT, make sure it's gross of VAT. I've seen that. And that you factored your refunds in. Also, if it's going to take a longer period than a year, or shorter than a year, whatever, look at changing a year end of your company so you get your tax credit as quickly as possible, and structure that.
And Andrew?
I think the big message is just plan ahead. In the same way as when you're developing a project, you think about which broadcaster would most like this. How would it work for that particular target audience? You also need to plan for the rest of your production. There's no point a broadcaster saying, yes, here's a commission, and then you go, oh, actually, how are we going to make this? Or how are we going to raise the rest of the finance? You have to already be thinking about the full process, because all of those decisions are things that affect how you act now. And so if you decide actually, you're not going to be able to raise enough money, then start looking at co-production, start looking at other opportunities. And when you're pitching and a broadcaster says, yes, great, you should already know what your next step is, how you're going to claim the tax credit, what your budget's going to look like, what your schedule's going to look like. And so I would say, don't just go and pitch projects and then wonder what's going to happen next. Go and pitch projects knowing what your roadmap is. Even if it will change and adjust, you have to know what your destination is, otherwise you really won't get there.
Thank you to the entire panel. So I think in summary, I can say you start early, you plan, you ask questions, and you get you get help. You ask questions and get help, and that you can do it, and you will do it with starting early and getting help. So I'd like to thank all of you for participating, and for those of you who have taken the time to watch us, we thank you. And I'd like to sign off by saying, next year in Sheffield, everyone, we will return July 22. We're all ready to go on that train and get back to Sheffield.
Absolutely.
Yeah. So thank you very much to the CMC, and thank you for participating. Bye for now.